Hi, and welcome to the X22 Report Spotlight. Today we have a returning guest, Andy Hoffman. Andy is the marketing director of Miles Franklin. You can see all his work on milesfranklin.com, and I am very happy to have him back on the X22 Report Spotlight. Andy, welcome back to the Spotlight.
Well, thanks for having me on this, the morning after the big French election, and to presage what we'll probably be talking about. My article this morning was titled, "What's Better for Precious Metals, Marine Le Pen or Emmanuel Macron?"
That's so funny because that was my first question to you right after the elections about Macron. Many people out there saying that he was, created by the central bankers, and now he is in office. Where does the EU stand? Just like you mentioned, gold, precious metals. Where are we headed now since he won?
Well, I wrote that kind of a provocative title because, of course, Marine Le Pen was theoretically better because if she won, it would have been a Brexit times 100. And right now we'd actually be, the powers that be would have been overwhelmed. The gold cartel would have been destroyed. The PPT would have been destroyed. And we actually would have had as I call it, the most overdue financial crisis in history this morning. So yes, in the short term, it certainly would have been better for precious metals if she had won. But in the bigger picture, ultimately we're going to get to the same place because it doesn't matter who's in charge, whether it's Donald Trump here or Emmanuel Macron there. The financial problems have to do with debt, and that debt has to default no matter who's in charge. So the fact that in the short term, in the long term, what's best for France would have been Marine Le Pen winning because she would have stopped their participation in the European Union, kind of like what's happened with the Brexit. But instead, it's empowered the ECB to continue to destroy Europe at an unabashed pace. And frankly, this Macron guy, I'm not going to go into all his credentials. I've written exhaustively about how he's the worst imaginable candidate. He's like a mini-me of Francois Hollande, except one with absolutely no experience. And as you said, he was obviously groomed because he was just taken out of obscurity and thrown into Rothschild Bank of all places. And then all of a sudden he's the economics minister under the most unsuccessful, lowest approval rating presidency in history. And next thing you know, he's getting 2/3 of the vote. And what I wrote this morning was, let's face it, the reason why the French people voted this guy in was because they were scared. They were scared there was going to be a collapse today if they voted her in. And that's exactly what have happened. But in the meantime, they put this guy in place who is going to continue with the very policies that has put France and the entire European Union at the abyss. And he's pro-Europe, he's pro-ECB, he's pro-immigration policy. These are the things that led to the rise of an independent party like En Marche and led to the rise of the National Front for the first time in history. Prevented the equivalent of the Democrats and Republicans in France from actually getting to the final round of the election. Now we, by the way, have parliamentary elections next month in France, which will be, split between four parties. So it's going to be a complete mess there. And I believe that the euro will resume its plunge to parity with the dollar. And all the issues in Europe will only get worse. And now the ECB has been given kind of a mandate to continue destroying Europe as it has been. So it's only put off the day of reckoning.
Now, you mentioned gold, precious metals, and we see that gold and silver, they've been hovering. They've been pushed down a little bit, but they've been hovering. Gold has been hovering around $1,200 range or so. But Bitcoin, for some reason, has been surging lately. What's your take on why Bitcoin all of a sudden has taken off?
Right. Well, first, let's talk about the precious metal part, because I think you're vastly understating to say they're down a bit and they've been hovering. Silver has been down now 16 days in a row. And the reason it's been down 16 days in a row is because of the all-time high cartel short position. The commercials at the COMEX. The highest they've ever had. The only other time they've had a position even close to this high was right after the Brexit, when you had an actual crisis and they were terrified of price taking off. Here you didn't have an actual crisis and they did this. And actually they started covering last week. We saw I think it was like the second largest short covering in any week in the last 15 years. So they're on their way to covering the shorts. And, I'm guessing silver's bottomed here, not to mention because the whole mining business is falling apart and at these levels and no one is selling actual silver. And, the physical buying, I'm sure, is, Andrew Maguire is talking about how strong it's been. So this is a typical thing, but what I saw in precious metals was, and I've been writing about this, exactly what happened at the time of the Swiss referendum for the Save Our Swiss Gold back at the end of 2014. They just violently smashed the price for the weeks leading up to it because they didn't want the Swiss people to believe that gold was a good thing. And then as soon as and in fact, they spent that whole time led by the head of the S&B, Thomas Jordan, saying, you can't vote yes on this referendum because we need all the flexibility we can get so we can maintain our Swiss franc peg with the euro. And sure enough, the second that referendum came through, precious metals bottomed that day, took off, and 3 weeks later they abandoned the peg. And I think the same thing was going on here. I think that the powers that be did not want the populace of France believing that there was a momentum for a Marine Le Pen victory. And that's why they were holding the price down. And now they're going to start covering their shorts. So there was nothing hovering and epic. The other part of where precious metals were that was scaring them was, and I've written about this ad nauseum also, is both of them had passed their 200 week moving averages. In gold's case, it's about 1239, so it's very close. In silver's, though, it was like 1720 or something. So it's been knocked off it. But they were terrified of those prices being held, and particularly gold's 5.5-year downtrend line, starting with the attacks of September 2011 when it was at its high at 1285 or 1290. That's when that downtrend line would have been broken, and that's why it's no coincidence that right at that level they started pushing the price down with these incredible attacks, unlike just about anything I've ever seen. So yes, that's what was going on in that market. And now that this election is over and you see the short covering has started, particularly in silver, I'm guessing that you're going to see the prices start to move back up, particularly because nothing has been fixed. They had an election in France, big deal. They voted in the same kind of person who's made all the problems in the first place. So that's that. Now, as for Bitcoin, anyone who's following the sector knows that I am the only person in the sector who has talked about Bitcoin for the past year. Yes, Bick Swear has talked about it, but he's not in the bullion industry. But I have been as bullish on it as anyone because I believe, as I wrote a year ago in my Bitcoin and precious metals, twin destroyers of the fiat regime, that it is being, it is being realized as a store of value, just as gold and silver has, albeit without 5,000 years of history. But more importantly, I think what's going on right now is the world is realizing that the fiat system, the fiat currency system, has destroyed it. And I've said that the only other thing that's destroyed more lives in history other than fiat currency has been religious crusades. And right now it's at the point where when this, as I call it, the largest, most destructive fiat Ponzi scheme in history implodes, which it will now really accelerate on imploding now that Emmanuel Macron has kept France and the ECB in the game. I think people are going to realize that the future of money is one where governments are not trusted to print it. It's going to be decentralized. And that's why it's not just Bitcoin. The entire cryptocurrency space is exploding. And I think that it won't take long before the system really does destroy itself. And you're going to see more and more money flood into cryptocurrency because people don't trust governments anymore, which is going to, probably deflect a lot of the government's manipulative attentions from precious metals, where, they're already running out of physical anyway, toward cryptocurrency, which is going to help precious metal prices go up, because ultimately gold and silver are not, utilitarian money. They are stores of value. That's what they've been for 5,000 years, and that's what they're going to be for thousands of years more. So I think that, the rise of Bitcoin is symbolizing a change in the monetary regime unlike any we've seen for centuries. And it's going to help gold and silver because ultimately both of them are fighting the same fight against the evils of fiat currency, which are destroying themselves at a pace never seen before in history.
Andy, do you think the central banks, do you think they want to take control over the cryptocurrency market?
Sure, they'd love to. The problem is they can't. That's my whole point, Dave. They will realize quickly. I mean, remember, look, back in January, early January, when you had the Chinese yuan was devaluing and almost went above 7, to the dollar, 7 yuan to the dollar. And there was a flight of capital. I mean, look, $1 trillion has left China in the last 2 years. And so China instituted massive capital controls. And they essentially shut down the Bitcoin exchanges. I mean, they left them open, but since early January, you have not been allowed to withdraw Bitcoin from a Chinese exchange, because they say it's money laundering, because they're scared that people are going to buy Bitcoin and then just, send it to themselves outside of the country, like capital flight. And so they thought that would slow down Bitcoin. And what has Bitcoin done since? It's close to doubled, and all the other cryptos have more than doubled, because people are realizing that you can buy Bitcoin in other ways. You can go to localbitcoins.com. There's tons of different ways you could buy it outside the exchanges. So while the price of Bitcoin on Chinese exchanges is much lower than in other places, the price in the black market is much higher, and it will continue to go higher. So again, governments are keystone cops, central banks and governments, when it comes to monetary regulation in the first place, but they don't even have a clue how cryptocurrency works. So their efforts to stop it are going to be laughable. I mean, again, it took 2 months before the whole Chinese thing, which was pretty draconian, blew over. I mean, it's going to be a time, I don't know, when you have the slightest bit of crisis here, when the PPT loses a little bit of control and commodities fall or stocks fall, they'll shut down Coinbase. They'll shut down the U.S. exchanges. They'll say it's money laundering, and the price will dip for a bit. And then right away, people start buying in other places, because the point is the governments can't control it. They'll even say that we're going to start our own cryptocurrency, but that's not a cryptocurrency. That's simply the government creating their own fiat currency, just, in electronic version. So the point is they're going to fight to the death, just like they fought to the death with gold and silver, but they're going to lose both wars. In the case of precious metals, they're going to lose the war to hold the price down. In the case of cryptocurrency, they're going to lose the war to control money. I mean, there will be a new paradigm, and believe me, that looming crisis, the follow-up to 2008, which can't be reversed, will end everything. It will end the fiat currency regime worldwide. And, it could come a lot sooner than anyone imagines.
Now, I wanted to turn to the economy here in the United States. Right now, the U.S. government, they approved a $1 trillion budget. It'll bring them up to September 30th, and we're in trouble again. We have the debt ceiling problem. Where are we headed with this? I mean, does this make any sense to you whatsoever, what Trump is doing right now?
Well, forgetting Trump for a second, look, the U.S. economy is at its singular worst point in our lifetimes, except for a handful of weeks in the middle of the 2008 crisis, and a handful of weeks right after 9/11, when it was kind of a deer in headlights where business stopped. Otherwise, quantifiably, we are by far, it's not even close. The level of business activity is so far below where we were at the bottom of 2008 everywhere. It's not even distinguishable, and let alone the debt. We've doubled our debt since that time to get to this level, so which should show you where we stand, let alone what's going on in the rest of the world, where it's no better. In many cases, it's actually worse. So yeah, we're in the worst case we've been. We've taken interest rates down to zero, and around the world, some places it's negative with all that debt. We have massive oversupply of pretty much all industrial commodities. Oil is the perfect example. I've been talking forever about this is the historic glut, and the OPEC production deal was a big lie, and it's falling apart right now, and that's going to cause major debt defaults. Now you've got, in the wake of the equity bubble in 2000 and the real estate bubble in 2008, we have subprime auto loan and student loan and echo real estate bubbles that are all falling apart, and the Chinese credit bubble. I mean, this morning in Canada, you have Home Capital Group, which is like the Countrywide of Canada, is about to collapse. And I mean, this is just symptomatic of what's going on around the world. So there's nothing we could do. And as far as what Trump's doing, look, I pushed as hard as I could to get him to win, simply because Hillary Clinton was the worst of two evils, but there's nothing he could do. And we found out already that there's nothing he can get done. Even if this supposed repeal and replace of Obamacare gets passed, which doesn't sound like it's going to by the Senate, it's not a repeal and replace. Yeah, it's a repeal, but it's a replacement with the same thing. We are the socialist states of America, and that's not going to change. And all his tax cuts, if they were going to happen, and I doubt that they have a chance of happening, it's just going to make these deficits worse and push interest rates higher. The interest on the national debt went above $500 billion a year for the first time last month. And this is with interest rates pretty close to 5,000-year lows for the world and historic lows for this nation. So there's nothing he can do. Good for him for trying, but he's just being a politician, and it's not going to change the laws of economic mother nature. So I expect that if we're not in official recession already, when they downwardly revise this first quarter number, we will be by the end of this year, because the forces of economic destruction are only getting stronger. And believe me, if you see the oil price go down below $40 per barrel, forget it. It's all over for the entire world. So I expect the economy to dramatically weaken, and I mean dramatically weaken, in the coming quarters. And I expect that there's nothing that any politician around the world, let alone the youngest politician in French history to ever be the president, to do anything about it.
So you mentioned the economy just really getting worse and worse as we move along here. And we know this retail is contracting. Everything is contracting. In the first quarter GDP, it was 0.7%. That's the manipulated number that they throw at us. And during this period of time, the Fed is raising interest rates. They didn't raise it this last May, but Fed Williams is out there saying that we are at full employment. It looks fantastic. We're way above our potential, and we are still on track to raise interest rates in June and 2 other times. I mean, why are they doing this into such a weak economy?
Well, of course they're lying, because even the Fed guys are not.
What? They're lying?
Yeah. Even the Fed guys are not stupid enough to believe the economy is growing or that we're at full employment. Janet Yellen herself has talked about the labor slack and the labor participation rate, so she knows. They're trying to instill confidence. I don't agree with a lot of stuff Jim Rickard says, but he's, his description of why they're doing it is, well, one, they're trying to create ammunition so they can cut rates next time, and or Peter Schiff has said the same thing. They want to instill confidence. It's a con game, and all you have to do is say, yeah, we're changing our mind. We've spent the last 3 years saying we're going to tighten policy and things are getting better, but we're changing our mind. Things are getting worse. The market crashes. So they have to keep lying to the point where it's almost laughable. And now the economic data is becoming even more laughable, to talk about how we're at full employment when, as you say, we're in the middle of a retail Armageddon. And, by the way, the only sector in this country, there's only 2 sectors in this country that have had positive job growth since the 2008 crisis. One of them is waiters and bartenders. And now that you have this retail Armageddon, let alone, the restaurant index itself is just in free fall. To say that there's more waiters and bartenders coming on, and they're all part-time minimum wage anyway, is laughable. And then the other one is energy production. Well, if oil prices are plunging now, energy production is going to fall too. There's no other avenues of growth other than maybe like healthcare workers, which don't produce anything. They just, are a negative productivity to the nation at large. So they know that. They're just trying to instill confidence that's misplaced, because everyone knows in the real world that the real world's falling apart. Look, the only thing the Fed cares about is the stock market, okay? Nothing else. They are bankers, and it's a con game, and Keynesians care about, the wealth effect and making people believe that things are well. And that's why the market has been manipulated every second of every day for the past 5 years, but particularly since the election, when, they were dealt a blow today. They thought they had everything in control. And then when Trump won, they had to really step it up to the point where the rigging of gold and silver and stocks, as I said last week, we have .com valuations in a Great Depression era. That's where we stand. So, everything's falling apart. And as long as the stock market has been going to .com levels, they feel like, yeah, we can get away with a quarter point rate hike here, quarter point there. Point is, they're still below 1%. Below 1%. We weren't below 1% after the whole 2000 .com bubble. And we still haven't increased, reduced the balance sheet, and never will. So again, they're just, trying to buy as much time as they can, because ultimately they're going to have to do QE4, and they'll take rates down to 0. And when they do that, then that will have the same impact on the gold market and as Marine Le Pen winning. And I think it's going to be this year, because the whole economy of the world is falling apart right now.
So you mentioned oil a little while back here, and you said if it's below $40 a barrel, we're in a recession. Now, many people say if it was below $50 a barrel, we'd be in a recession. So, are we in a recession right now?
No, I didn't say it would be below under $40, we'd be in a recession. I said under $40, you'd have a cataclysmic debt default, unlike I mean, it'll be bigger than
So
the
that's
mortgage
worse.
defaults. It'll be bigger than the mortgage defaults of 2008. I mean, look what happened a year ago. It was only a year ago when oil prices were down to $25 a barrel. And, look at what the high yield bonds were doing. They were collapsing and all the commodity currencies were in free fall. And that's what will happen again. I mean, Saudi Arabia will go bankrupt. I mean, that's why they want to take Saudi Aramco public for $100 billion because they're hemorrhaging money right now. So we're already in a recession. But if we go below $40 a barrel, I mean, we'll be in a depression because all the energy companies will be mass default. And that's going to happen. It's not just energy. I mean, I'm looking at the CRB index, which has been, it's still well below. It's 30 or 40% below where it was 2 or 3 years ago when I wrote my direst prediction of all articles saying that commodities would crash. But it's been supported at about this 180 level for the past year or so, mainly because of the oil PPT, which was created last year when oil was $25 a barrel to jawbone and create fake oil OPEC production deals that never happened just to try to keep the price up. But now the CRB has plunged below 180, and I think you're going to see a real major decline in commodities in the coming months as the economy falls apart. And then all pretense of trying to pretend that was a strong economy, let alone with full employment, are going to be gone.
So you wrote an article I saw on May 5th, Global Economic Disaster Dead Ahead. And this is what we've been talking about right now, where we're heading towards this huge crash of the economy. And when we reach that point, I mean, are there any signs that you're looking at? I mean, one, you said there was oil. Are you looking at anything else to give you a heads up that we're getting closer or everything's about to fall apart?
Well, you don't need to look at one thing because there's so many things going on. I mean, one thing is, of course, interest rates, which, despite all the hype, are just sitting in the middle of this trading range. Well, I mean, look, the 10-year peaked at 2.6 right after the election. It's like 2.35 today. It's going nowhere. The rates can't go up because the economy will collapse if they do. Commodities is a major, major thing to look at. I mean, we're talking about, it's not just oil. I mean, look at now Dr. Copper is plunging and, most of the agriculturals are plunging and corporate earnings have been down for, aside from some accounting gimmicks, particularly at some of the larger companies, 7 quarters in a row, and they're going down. GDP was just pretty much zero. And, it was barely above that in the fourth quarter. And look what's going on around the world. It's no different there. And now that the election is over in France and we could stop with this pretense of, if Macron wins, the euro is going to be strong. No, Macron wins, the euro is going to weaken again. I mean, it's down today and you'll see it'll start bleeding back down toward dollar parity in the coming months because the euro is toast. The euro is in far worse shape than the dollar because it's, the European Union is going to fall apart. And so again, I'm looking at a million signs and look at the political things going on around the world. I mean, people aren't happy. So, and God forbid we start a war with like North Korea or something. So, plenty of things to look at. None of them good that I see. As I call it every day, PIMB, precious metal bullish, everything else bearish.
So, Andy, when these bubbles start to pop and things start to really go south and the central bank, they step in and they start creating stimulus once again, what can people expect to happen? I mean, will we see incredible inflation? The stock market, I'm sure they'll try to pump that right back up. But what else will people experience? Are we going to have huge job losses? I mean, will the central bank, I guess my question is, will the central bank be able to stop this entire system coming down?
Well, it's funny because you're saying, when things get bad and the central banks start to, print money again, the thing is, and everyone should read my Macron or Le Pen, who's more bullish for precious metals article today. I mean, it's 8 pages long and I'm showing, this very month was the all-time high in the history of central banks for monetization. We're at like $250 billion a month right now. Mostly the Bank of Japan and the ECB, but, others are in there as well. So we're already at the highest level of overt, not including covert, overt monetization in the history of mankind. And yet we're talking about what's going to happen when they really start to increase the money printing. And of course, you're referring to the Fed.
Yes.
What will we see? Look, part of inflation is, when you talk about stock market, is the PPT. So it's not just like money flowing into the market. It's called them printing money and buying the stock market. I mean, look, and everyone's got to read this article right today. I'm showing how now the Swiss have admitted that they have bought like $90 billion of U.S. stocks alone in the last 2 years. And, we talk about how the NASDAQ, like 40% of the NASDAQ is the 5 biggest stocks, and like 40% of the gains in the NASDAQ in the last year are due to those 5 stocks. Apple and Facebook and Google and Microsoft. And guess what the 5 biggest holdings of the Swiss National Bank are? Those 5 stocks. So it's central banks that are making the stocks markets go up. There's no doubt the Fed has been doing it. I mean, that's what the dead ringer algorithm I've been talking about for years. The stock market bottoms every day at 10 a.m., which happens to be when the Fed does its open market operations. And now you have banks like the Bank of Japan and Switzerland admitting that they're buying stocks. In fact, I couldn't believe this, and I wrote about this today also. The Bank of Japan's balance sheet is $4.4 trillion. So it's the same amount as the Fed's balance sheet, even though they have a third of the population and a quarter of the GDP. And yes, I know the Fed buys tons of stocks and bonds covertly, but the fact is that there's that much monetization going on. And at least the Japanese and Swiss admit that they're buying stocks. So how much more can they buy? And what will be the impact when things get really going? Well, you're definitely going to see the cost of living rise. That's a given, because you always will see need versus want items go up in value. And that hasn't changed at all, despite all the deflation that we're warned about. The cost of living continues to go up. And I can guarantee you the cost of living will rise in perfect correlation with that money printing. And I also that the price of precious metals will rise because the cartel will be overwhelmed by physical demand. And as for the stock market, I'm not sure if it'll go up in nominal terms. It may hyperinflate like Venezuela did, but in real terms, you're going to lose in financial assets, which have never been more overvalued in history.
How should people prepare for this? What's your advice that you would give someone where they're just looking at this and they're hearing what we're saying? What would you tell them to do at this point to get prepared for what is about to happen?
Well, I'd say, get your head out of the sand if it isn't already, and realize that what you're seeing in your daily life and what people that you know are seeing is real, and it's not getting better. And if you're talking about financially, look, I mean, I give financial, I'm a financial expert, and, I work for a precious metal bullion firm, and I hold all not all, I held a lot of Bitcoin now too, but precious metals is, the best way to protect yourself from inflation throughout history. And I think that you need to start thinking about these things quickly, because if you're holding all your assets in the most historically overvalued and propped up financial assets of all time, you are going to have some historic real losses in the coming years. It's just a matter of when.
Andy, thank you very much for being on the X22 Report Spotlight. I really appreciate it. Once again, how can people see your work?
Again, Miles Franklin, Precious Metals, been in business 28 years without a single registered complaint. I write every day for free and do these kind of podcasts, all for free at milesfranklin.com, or you can email me at ahoffman@milesfranklin.com.
Andy, once again, thank you very much for being on the Spotlight.
You're very welcome.